Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Tuesday, December 29th, 2009. Well, we have a mixed day on Wall Street today with the markets hovering just around the flat line as we get into this last trading week of 2009 coming into the New Year's Eve, New Year's Day kind of holiday season right here. What we're going to look at today in the video, folks, is not only the SPY and talk about the intraday moves, what are we moving off of today, but also some key stocks out there that I think are noteworthy. So I want to analyze them. I want to analyze the markets, give you guys some projections going into the end of this week, make sure that we're fully versed on what to look for going into the new year as well. Now, a couple things to go over before we get started. Number one, let's talk about what the Dow, S&P, and NASDAQ are doing. The Dow is up 9 points on the day. NASDAQ down 3 points. S&P is down about 1 point on the day. So you can see a very much mixed market coming into today. Now, we did gap higher, but the key about the gap up today, and you're looking at the intraday chart of the SPY, which mirrors the S&P 500, is that we gapped up into a double top. Now, you can see the high here at 113 yesterday on the SPY. We gapped right into that today. Now, the key about that 113 is just not a double top. It's actually a master level that we've isolated. And we told our premium subscribers to watch that level literally weeks ago, if not a month ago at this point, to watch for the market getting there, that it would have huge resistance points at that point, not only on the intraday, but also on the daily. And you can see yesterday the high, and today also the high at that 113 level on the SPY. Now, off of that, you can see the market opened up higher nicely, but then started to sell a little bit, came back in, rebounded up towards that high, and then fell all the way back in to really come into the flat line today. The SPY, in fact, is down about 4 cents on the day right now, just hovering around the flat line. Volume today, very, very light like yesterday. All right, for the most part, it's the same type of volume environment. We see about 40 million traded on the SPY, projecting out that's looking for about, I'd say about 75 million to 80 million, of course, across the board on volume today, which again would put it right in line with the lightest trading day of the year. That's the way it's going to be for the most part the next couple days, unless you see some sort of crazy geopolitical event, which is always possible. I mean, think about Thanksgiving. U.S. in the U.S. here, we had Thanksgiving, and on that day we had the whole Dubai debacle with credit default nonsense and all that stuff, and it created a pretty wild trading day on that half day on Friday following Thanksgiving. So just putting that together, you can see how there is always that possibility. You have to kind of pay attention to the outlying, geopolitical news. But in any case, what you're seeing again, folks, is the market hovering right here around gap fill. In fact, we're getting a little bit of a boost now. What the thing is I want you guys to watch is what happened yesterday, and this is something that you need to pay attention to. Yesterday, we kind of were very weak into the early afternoon session, kind of got a slow float, a little bit of a pullback, and then a buy program hit in the last 30 minutes of the trading day. Really, the last 15 minutes was when the majority of that buy program kicked in. And that really spiked all the way up here to give us a positive close. It would not surprise me if that same type of maneuvering happens today in the market. So just watch towards the end of today to see if you get a buy program to push this market up a little bit and just close it slightly positive across the board. That, in my estimation, is very, very likely. It's basically what you're seeing there is not only some, nonsense window dressing, people kind of, buying some stuff into the close, into the end of the year to have it on their portfolio statements. And again, you're talking about 3-day settlements, so that's kind of coming to a close. But in any case, what you want to keep in mind here is also just the nature of the beast. You're dealing with a government right now that, for instance, slides the fact that they bailed out Freddie and Fannie Mae, or they took the cap off how much they were allowed to bail off, and making it essentially infinity on Freddie and Fannie, so they could pump as much money in. What they did there, folks, is to take that cap off, and they slipped it in on Christmas Eve, essentially doing it so no one in the market would know about it, or no person in the public of the U.S. citizens. And again, I went on a whole rant yesterday in the premium video going off on that based on how disrespectful it is to the American people, who, it's ultimately your tax dollars that are going to bail out these companies, and kind of they took off the cap. Originally, I think it was like 150, 200 billion that they were allowed to, and that was the cap. They took it off so they could put $1 trillion, $2 trillion, whatever it is, ultimately whatever they need, just pump as much money of your tax-paying dollars into that as they need. And again, to do it on Christmas Eve when, everyone's with their families, enjoying the holiday, not even paying attention, is very, very sneaky and backstabbing in my opinion. But in any case, I digress from that. Let's get back to the technicals. Again, market hovering on the flat line here. To just note, what you can see see here, let's take a look at Goldman. One thing I noted this morning to our premium subscribers in the chat room was that the financials actually looked like the strong sector today, and that continues to be the case. What you can see here is intraday, Goldman Sachs had a big push, then a big fall. Now it's kind of floating back up on light volume here, but it's up $1 on the day. So you're seeing the financials having a decent day. Even JP Morgan is slightly positive today. Wells Fargo, here's Wells Fargo's chart. That has come back to the flat line, had a nice move going, then it came back to really the flat line on the day. Morgan Stanley is up about 24 cents, actually at the highs of the day. Nice move on Morgan Stanley. So in any case, that's where the financials stand right now. You are seeing the financials slightly higher, leading the market, especially on the back of Goldman Sachs, Morgan Stanley, JP Morgan. Some other stocks that are strong, you could look at ExxonMobil. Let's take a look at Exxon. Exxon has come in quite substantially. It was initially strong this morning, but came all the way back down, is now just down 15 cents on the day, although you are getting a little bit of a buy program here off a beautiful double bottom. Please note the double bottom. All right. Other stocks and other stocks that are weak, you can look at technology. Now, technology has been on an insane rampage lately. I mean, it's just been an unbelievable run on technology. And ultimately, what we are seeing now, folks, is technology actually fading. In fact, Google is down about $3 today. You see Apple trading down nicely today, also down about $2.20. I actually issued bearish sentiments on Apple and Amazon. Amazon gapped up today, folks, but it has come in dramatically. Look at this fall. And one of the charts that I've been showing you on the daily chart, highlighting the weakness in Amazon that I believed was in tune, was this line right here. And I want to just draw your attention. You see this line from this gap up, this is the gap window, to this low, connected right through these lows, and look at this. You hit it, the next day hit it. Each day you're hitting it and piercing it, but you can't get through. And look at the reversal on Amazon today, that big red candle from a gap up pushing all the way down. I continue to be bearish on Amazon, folks, based on this trend line right here is telling me that that's going to eventually come back in a little bit and come back down. In addition, I did also talk about Apple. Apple expecting a pullback, and sure enough, look at that nice little red candle starting on Apple, just talking about how extended it was. However, the best call that most likely went out was an article I wrote yesterday around just around noon. I put it out on the PR wires. You can find it on Google Finance. If you want to find it on Google Finance, look up U.S. Steel. You can look up Alcoa. You can look up a bunch of these metal stocks. And I put out the article basically saying that you're going to, based on all the fundamental and technical analysis that I do, and there's some proprietary stuff in there, I showed a high probability of a 10% or more correction coming in stocks like U.S. Steel, Alcoa, titanium metals, Century Aluminum, all this kind of stuff, that you were going to have a very big correction. And sure enough, no sooner had I put out that article, folks, and again, all I do is just read the technicals. I don't care if it's long or short. Whatever the technicals and the fundamental stuff is telling me, I'm going to put it out that way. But look at the drop on U.S. Steel. I put out the article yesterday when we were trading up here. Since then, look at that on U.S. Steel. A 5% drop on U.S. Steel from where I issued the alert. I gave it a red alert with a sell signal right there. So if bias to the downside, and look at that drop so far. And again, that's just, again, going by the technicals, which is what we do. That's our kind of nature as a company here. We give guidance, education on technicals mostly, and a little bit on the fundamental side. We obviously pay attention to the psychology of the markets as well. But sure enough, a huge call. And again, you can find that on our blog, in our article archive. You can find it on Google Finance, all these articles on all, we published it out, and it got picked up by a lot of the key sources out there as well. So, again, just that's one. We talked about Alcoa. Alcoa is down. Look at that little top being put on Alcoa. We put out the alert yesterday when Alcoa was near the highs of the day. Century Aluminum down here, starting to roll over, way too extended still. And then, of course, titanium metals. Nice drop. Look at that drop on titanium metals right there. That's a beautiful little top. And, again, we put out that call right up here, folks, yesterday, that went out to everyone. So again, a beautiful little comeback and a call that continues to show the analysis is correct on this stuff. Now again, going back to a couple other stocks, let's take a look at ExxonMobil on the daily chart. Daily chart's interesting. We talked about this daily chart, folks, as it continues to trade sideways. What type of pattern is this? Just going by pattern, it's actually an in spirit of bear flag. However, I'm not sold that this is done forming the bear flag. It may go sideways to up a little while longer over the next couple days. Ultimately, I think this 20 is going to slope down into the 200, and that's going to be a nice little necktie of resistance. And if price happens to come into that necktie, I think that's the short of the century right there. Not necessarily the century, but it's going to be a nice short-term swing trade short if that were to come to fruition. Last but not least, I want to mention, again, coming into the new year, folks, we're going to have 2 hidden gem releases in the early portion of the year as part of the Research Center to say thank you to our current members and entice new members to join up. And you want to be in on that. Again, as I mentioned in yesterday's video, the average hidden gem last year returned 129%. These are small caps ranging from 50 cents to $5, even a little higher. Some of them were even higher, $10, $15. But they're all small caps. They're all hidden gems that are flying under the radar. We find them. We make sure that you know the due diligence. You can verify the due diligence. We always encourage that. And then ultimately, hedge funds see our due diligence and they pick them up. And, it runs the stock. The stocks generally get finally picked up based on the fact that they're solid plays. All right, so have a wonderful day. We encourage you to join the Research Center and the chat room. Talk to you soon. Take care.